Hey everybody, it's Mark Yegge. Welcome to another weekly stock market update. I am glad you're here. Got an interesting thing going on in the market. We had like kind of a head fake thing where we went green and then we went yellow and then now we went green again yesterday. But boy, you know, like most green markets, it doesn't feel green. And by the way, you know, not all green markets lead to like an extended green market, like where it keeps running up. But there's never been a green market that's run up that hasn't started with a green indicator. So we are green right now. I'll show you what it looks like. Just got off our mastermind call, and I want to show you what we're coming up with. So hopefully you can see that. 1 second. Okay, great. All right, good. So you can see on this chart, we have a green market. There's really 3 green lights as of last night, and we have to wait to see what happens with the close. But we have 3 green lights, probably 4 green lights today and going into the weekend. We'll see. And it needs to stay above that. It's tenuous, though. There's not a lot of strength in this market, but nonetheless, sometimes the green markets feel like that. So that's why we always say you got to get involved in the market on the first day, because it's a discipline thing for us. NASDAQ is above its 50-day moving average, or at least it was around 12:30, 1 o'clock when we were printing this out. And you know, looking fairly good. If things above their 50-day moving average are good, and with some not bad volume, right? Not bad at all. So we want that to happen. The S&P 500 also above the 50-day moving average. Not such great volume on that one, but we'll see how it shakes out by the end of the day. It is Friday after all. The Dow Jones, not so good. It went up almost to the penny, testing its 50-day moving average and couldn't hold on. We'll see if it can get a resurgence by the end of the day. I don't think it's in any trouble. I just don't think there's a lot of conviction buying, selling. It's kind of a blah market, at least for now. And I think the market's kind of doing that wait and see. Hey, let's see if it's going up. Let's see if it's going up. Then we'll get involved, right? You go first. You go out, jump over the cliff, see if you die. The New York Stock Exchange is below the 50-day moving average, like the last average I showed you, the Dow, and needs a little bit more work to get above it. But so we have kind of mixed stuff, right? We have some momentum above. We have some below. You know, it's just kind of sideways-ish, really. But we have a record low, at least on this chart, of the volatility index. That's what I call the panic index. So there's panic is coming out of the market, which means more people will be coming into the market when they feel safe on the panic index. I don't know what happened to that. There it is. And then I just want to show you, I've been pointing out this to our mastermind group over the last several weeks. This is a lousy chart. This is the airlines, and they're telling us something, like it ran way up and now it's giving it all back. And the airlines is telling us something, that maybe 12 months out, 18 months out, there's going to be a recessionary trend going on in travel. So we're just going to keep an eye on that, because that's below the 200-day moving average. And like, that is not a good chart. There's trouble there. And I can't put my finger on what it is, but that's the market. The market tells us way before we actually really know what the problem is. Tesla's got a few gaps that it wants to fill. And we've got a 5-day in a row higher highs and higher lows going on, and off of a gap up above the 50. A lot of good stuff stacked in place there. I think it's on a little breakout from a slight cup and handle pattern or early entry. The early entry was around 261. And so that's kind of what it's showing. And it's holding that up. That's pretty good. It's a wild ride in Tesla. So be very, very, very careful. Apple change its personality, right? Look at Apple running up beautifully from 124 to 198, just like almost a straight line, although we know there aren't really any straight lines in the market, but that's a pretty good chart. And then all of a sudden, gapping down below the 50 on volume, not recovering it, trying to recover, got above the 50, came back down, gapped down on volume, and now it just can't get out of its own way. I suspect that it's so weak that it's going to, first of all, go test that 171 level. Right now it's around 175. It may even go down and test that 200-day moving average, which right now is at about 165, I would say. So it could have some room on the downside. There's not a lot of good stuff going on. I guess they didn't like their titanium phone with the USB-C thing that was released in it. On semiconductor is kind of following along what the little bit of trouble for some reason that's going on in semiconductors is weakening a bit. So it's below the 50-day moving average. On kind of does this. It moves a couple of percent a day around that 50-day moving average. I don't know if there's any real trouble in it, but we will see as we look at it. But listen, that's it for the stock market update. I don't want to bore you and kill you with too many stocks. Things are okay. Things are not fantastic, but they're green. And you know, if you want to get involved in the market, great. We have a mastermind group that meets every Friday. And you know, if you're interested in making reliable income from the market, we can teach you how to do that. But anyway, I like giving these reports to you. If there's anything that you'd like to see, if there's a place to comment below the video, please do so. Otherwise, have a fantastic weekend. See you next time on the next stock market update. Take care. Bye.